So in this part of the video, we are going to solve this sum. So we will be like using the direct method and the indirect method for solving the problem. So we'll just look at the format and the statement. So this is the format that we'll use to solve problems. So what you saw in the theory part of it, okay, anything like a real company's statement of cash flow, that's only like to show you how it works. But to solve sums, this is the format. So you have to first find out the cash flow from operating activities. So the heading is cash generated from operations. You have to deduct the interest. Okay, interest is deducted and income is deducted. Income tax is deducted. You will get net cash flow from operating activity. And this alone we will do in 2 to 3 sums. We will try to do. We'll do both direct and indirect method. And cash flow from investing activities is like what we saw in the theory video also. Okay, anything which is cash outflow is a minus and cash inflows are positive. Okay, so purchase of non-current asset or any purchase of share is a cash outflow. Anything which is sold in that nature like non-current asset or share or debenture, and any cash inflow received is a positive thing. And again, issue of shares in financing activity is a positive thing, and any issue of new loan is also a positive cash flow. Any repayment of loan or repurchase is a cash outflow activity. Okay, even dividend paid come here. Okay, dividend paid come here. Interest paid does not come here. Interest paid comes here. Okay, and once you adjust all this, all the headings, you will be like getting net cash flow from all the activities. So net increase or decrease in cash equivalents you'll get. You have to add that with cash and cash equivalents at the beginning. If you add that, you will end up with cash and cash equivalents at the end of the period. So it is like adjustments in the year plus opening will lead to closing. Okay, so that's about the format here, but we'll slowly learn the format as and we go. We can't like to have all the elements in the format here because there are like many elements in cash flow problems, so we have to tackle them slowly. Okay, so this is the direct and indirect problems. So what we are going to start with is a direct method. Okay, we are going to start with the direct method. So in direct method, the pro forma is going to be like this. Only for operating activities we are going to do. So directly any cash receipts from customers is a cash inflow. From there, any payment made, okay, any payment made, anything like payment to suppliers, employees, okay, and then we adjust the interest paid and income tax paid, we'll get the net cash from operating activities. So that's about the format here. So if you see, both the formats will give you the same number as the last number, this one as well as this one. Both gives you the same number it will give. Okay, but the approach is like different. Okay, so we'll see like few sums for direct method first. So this is the direct method. We have the format here. Okay, and we have to have some few working notes we have to do. Then only we will get the answer. Okay, so I have worked out it already, but we'd have to work out the numbers again. So we'll work out. Okay, so we'll start. We'll first read the question and then we'll move on to the sum. So Bogisco had the following transactions during the year. A, purchases from suppliers were 19,500. Okay, so they have purchased this, of which 2,500 was unpaid at the year end. Okay, so the total purchases has been like this amount, and there was an unpaid amount. Okay, for 2,550 was unpaid at the year end. Okay, so I think in the closing they are still being unpaid. Brought forward payables were 1,000. So from the previous year, which was like unpaid, that is like which is brought forward is 1,000. Okay, so first I think we'll deal with this one. So what we want here, does it mention any cash activity? See, it does not mention any cash activity here. Okay, but indirectly when you have these items, you can find out the cash. How? We'll start a working note for purchases. Okay, so let's see what's the total amount of purchases that have been made for the year. 19,500. And if you see the account for the year, okay, the account for the year was opened with 1,000 rupees of unpaid. So initially we didn't pay 1,000 rupees, and additionally we have bought goods for 19,500. So totally 20,500 has been unpaid. But if you look at the end of the year, okay, at the end of the year we have made payment for 2,550. We have made the payment. Okay, so if you close it, it comes to 17,950. Okay, it comes to 17,950. Okay, so this, what does this 17,950 represents? Okay, this represents cash paid to suppliers, right? So you got the idea. The same idea is what we are going to use in all the sums. Okay, not only in direct method, also in indirect method we will use it. So ensure that you get this idea. It's not that you have to work out only in this basis. You can also open a ledger and you can do it. Okay, but I feel this is like quite easier to explain, so I've used this as a method. So cash paid is a cash outflow. Okay, it's a cash outflow, so I will mark it as a minus 17,950. Next, wages and salaries amounted to 10,500. So the current year bill is 10,500 for wages, of which 750 was unpaid at the year end. So out of this amount, 750 has not been paid. The accounts for the previous year showed an accrual for wages and salaries of 1,500. So we'll open a wages account. So the total wages for this year has been 19,500. And at the beginning of the year, okay, we had not paid 1,500, which we should pay in this year. And at the closing, okay, at the closing, we have 750, which is still unpaid. So what does this mean? We already have to pay 1,500. This year we got work for 19,500. So it totally comes to 21,000. Out of 21,000, we have not paid still at the year end 750. So totally it means we have paid, okay, we have paid cash paid to, or cash paid as wages is 20,250. So we can put it here. Okay, we'll take one line down. So cash paid to suppliers is this number, and cash paid to employees is this number. Okay, now we'll move on to the next one. Interest of 2,100 on a long-term loan was paid in the year. Okay, so any interest paid has to be directed. So interest paid has to be like naturally directed. So it is 2,100. Next one is sales. Okay, so sales revenue was 33,400. So in this year we have made that amount of sales. So credit sales is 33,400. So the sum has not given it as credit sales, okay, but we are assuming it to be credit sales. Okay, so in exam it will be much more clear, assuming sales as credit sales. Okay, and how much we have already sold, including 900 receivables at the year end. Okay, so at the end of the year, 900 rupees have not been paid by our customers, but at the beginning we had to receive 400 from them. So we already have to receive 400 from them. In this year we have sold 33,400 and still they are pending for 900. So add these both and deduct this. Okay, deduct this, you will get the answer. So answer is 32,900. So that comes as the first number. So we'll try to get the answer. Okay, so this 2100. Okay, I think wages is 10,500. Sorry, I think we missed it. Wages is 10,500. So we have this amount. So wages is only 11,250. Sorry. Okay. And we have received interest on cash deposit at the bank amounted to 75. So this is a interest on cash deposits. So this could have been shown in two places, either in investing activity because we have invested it in a uh, in a bank, so you could show it as investing activity, or you could show it here. Okay, you could also show it here, but if you show it here, you should not show it in the financing activity. Okay, so that you can't do. So we'll put it as add interest received 75. Okay, so you got your number. So that's about the net cash flow from operating activities. Okay, here you have choice to show in investing or operating activity. Okay, you have that choice, so we have shown it here. Okay, so that's about the sum here. So that's about the sum here. We will see another sum in the same direct method. So this is a similar problem, okay, but it's like given in a different format. The question is in a different format. So we'll read this sum and then we'll try to solve it. Using the direct method of presentation, prepare the net cash flow from operating activities. Extract of the statement of cash flow of Flute for the year ended 30th December 2018. Okay, so we have to prepare a direct method of presentation. So he has given us numbers. So opening number is here, closing number is here. So trade receivable, payable, accrued refers to outstanding expense, interest payable, so that is interest outstanding, income tax outstanding, like that. And they are also given you the profit and loss account numbers. So these are the numbers for the current year. So sales, it's given, purchase, wages, interest expense and income tax is given. So they tell you, note, at 30th December 2018, Flute had agreed to but not yet accounted for a contra between trade receivable and payable amounting to 230. You don't need to much worry about this. Okay, so we don't need to discuss about contra because contra refers to a little bit more explanation. Okay, better what we do, we'll ignore this and we'll just do the sum. Okay, but still we'll get the answer. So we'll start. So we'll start from trade receivables. So sales is here. The credit sales for the year is totally 427,915, right? And the last year credit sale, which is still we have not got the amount, therefore comes to 35,633. Okay, and the closing, okay, this is what we would receive in this current year, but what is still not received is the credit sales. So credit sales comes to 31,250, and let's see. So this is what the company has to receive, okay, and this is what the company still has pending, and this is what the company would have received as cash. So cash received through or from customers. Okay, so we'll copy this number and we can put it here. Okay, I think it won't come. 43,2298. Okay, so the next number is payables. If you look at payables, payables refers to purchase, so we will put it here. So the current year we have 1,65,000 as purchase. The previous pending bills which was unpaid by us is 13,750. So both of this we have to pay it in this year, but there is something that is still unpaid by us, that comes to 14,195. So this is what we have to pay. Okay, this is still pending. The difference between these is the cash paid to suppliers. Okay, so the next one is wages. So wages we have here. So the current year wage is 52,750. This is what is for the current year, and last year we have not paid for 835. Okay, and this year we have a pending of 1035, sorry, 1015. So totally it comes to 52,570. Okay, so we can take this number, we'll put it here. So these are negative numbers. These are negative numbers because these are cash outflows. So we have interest. Interest is an expense. Okay, we have to direct it here. So let's see. Let's first add these up to these elements. So interest, currently the expense is 325. This year we have to pay 325. Last year what we have not paid is 300, and currently we have a pending of 350 now. So totally we have paid 275 as interest. Okay, income tax works in the same way. Income tax works in the same way. So income tax comes to, currently the income tax is 1515, already which we unpaid is 1075, and currently we have a new pending for 1250, and 1340 is the income tax which is we have paid, 1340. Okay, so the answer comes to 213558. Okay, the answer comes to 213558. So that's about the answer here. Hope you got the idea here. So you just have something which is unpaid for the opening balance, that added to the expenses or income of the current year, and deduct the still outstanding for the current year. So what you get as balance is the cash movement. Okay, you will get the cash movement. So that's about this problem. Hope you have understood, and also have a look at the working notes. So that's about this problem. We'll move on to the next problem. So this problem would be like very easier, because like it's very similar to the problem which we did in just a few minutes ago. Okay, so what you do is you could read this. Okay, you could just read this, pause the video and read this. So just the numbers have been changed. So you could work out this sum by yourself, but still I will work out here just in a few couple of minutes. You can just watch it. You can have your own idea. Okay, just try in a paper. So you can pause now and try it in a paper and see like whether you are getting the answer, and then see the workings that we do. Okay, so hope you do this sum by yourself, and if you have done, okay, I will show you how the working works. So it's 18,500 of current year purchase. The amount which is still pending, okay, is 2550. The opening which was brought into account was this number. Okay, so this is the purchase number. It's a negative number. And then we have wages. So the next one is wages. So wages is current year, it is 9,500. Still unpaid at the year end was 750. The opening unpaid is 1,500. The next one is interest. So interest which is paid on a long-term loan is minus 2,100. It's a cash outflow. Income tax paid is not given. So sales revenue is given. So we can quickly do that. 33,400 is the credit sales made. At the end of the year, still 900 is unpaid. The opening is 400. So we can take this number. This is a cash inflow. So you can have it as a positive number. And we have interest received here. Okay, we have interest received here, which is 175. Thereby we get the answer, but we have to type. So interest received we have mentioned. So that's about the answer. Hope you got the same answer. So this is about the direct method. So we don't have any direct method problems hereafter. We only have indirect method problems. So we'll start from indirect methods. So indirect methods are a little bit lengthier procedure, and it takes quite a lot of understanding. So we can learn as we progress. Okay, rather than having the full format, we learn as we progress. So it will be helpful for you to understand, okay, and also build a format for your own self. Okay, so we can't give a detailed format for this. Better you can create a format for the cash flow. Okay, So we'll solve bit by bit. So we'll start here. Okay, so we'll start from this problem. From the following trading and profit and loss account of K Limited, you are required to ascertain net cash flow from operating activities. So you have to work out and get this number. Okay, so this number we could also see like where it exactly comes. It comes in this part. Okay, but still there's another one more element here, but we'll see that later. So SOPL, so statement of profit and loss account for the year ending 31/3/1999. Okay, don't worry about the year. Okay, I think there's some typo mistake. Okay, that can be the year. So this is a cost of goods sold, gross profit, sales amount, and everything. And they have also given you a lot of items. Okay, stationery, depreciation, salary, loss on sale of investments, rent and tax, discount on issue of debentures, postage, provision for tax, proposed dividend, and net profit. Okay, see, the number that we have to start for working out this kind of a problem is the net profit. Okay, so profit before interest and tax is what we have to ideally get. Okay, so first check, we'll do that. So we'll try to get this number, profit before interest and tax. See, is there any interest here? Okay, there's no interest. Is there any tax here? Okay, tax is also not there. So this number is going to be 73,000. There's no adjustment to this number. It is just 73,000. So this 73,000 is the first number here. Okay, if there's any tax or anything, you have to just add it back. Okay, you have to add it back. As it's not there, we can just start. So we have to add all non-cash expense. We have to add back, and we have to less any non-cash income. Okay, so we'll start. So any non-cash expense that we have here, we'll start from the list. Okay, from the top. Stationery is an operating expense, so don't worry. Depreciation is the first item. Okay, depreciation is the first item, so we'll put it here. So I think we have already typed and kept it, so it's easy for us. First one is depreciation is 14,000. We have to add that back. Next one, salary is an operating expense. Okay, that's not a problem. Loss on sale of investment, that's a non-cash item, so we have to add that back. Okay, if it's a normal business expense, you can leave it. If it's going to be a non-operating income or expense, that you have to remove it. Okay, so what we are doing is the maximum items that are usually comes in a cash flow statement adjustments. See, rent and taxes, it's a normal. See, rent and taxes, this is not the income tax. Rent and taxes refers to like rent. Okay, and the taxes is something like operating expense only. Okay, it's not income tax. It's some other, I think it's like it's coming with rent, means it's not like taxes. Okay, it's not taxes alone, it's like predominantly rent. So that's an operating expense. Discount on issue of debenture, that is a non-cash expense. Why it is a non-cash expense? Because discount on issue of debenture would have been long gone. Now we should not be like having it. Okay, we should not like show it. So 4,000 has to be added back. Postage is a normal expense. Provision for tax, it is not a real cash expense. So provision for tax, we have to add back, that comes to 20,000. And proposed dividend, we have only proposed it, we have not paid it. So proposed dividend is not a, okay, proposed dividend or provision for dividend. Okay, provision for dividend, I think provision for dividend, these are not actual dividend, these are like now only they have proposed it. Okay, so all these are expenses that have to be add back. See, there's no non-operating income on this side, so there's nothing to be, so this number is ideally not there. Okay, it is just like 0. Okay, so these numbers are also not there, so there's no interest expense, no I think here we have, okay, loss of profit or sale of asset or something like that, that and all we don't need to have now. Increase decrease, okay, adjustments for current asset and current liability is there. Okay, but that is not in the sum, this is also not in the sum, so we can directly, we can get the number. So we can eliminate all this part. Okay, he wants only this part. Okay, he wants only cash generated from operations, this part is what he wants. So the sum of all these numbers, let's see the answer. So answer comes to 1,23,000. Okay, so that is the right answer. Okay, so that's about the problem here. So maximum, these are the non-cash expenses that would come in a sum. Okay, you won't be like having more than this. So I've picked out sums which are so unique, which can help you understand bit by bit of cash flow statements. Okay, so the first number that we got till here is called as cash generated from operations, and the ending number for operating activity would be net cash flows from operating activities. Okay, so this is the ending number. So that's about this sum. We'll move on to the next sum. So the next sum here, uh, we are like now focusing on these two elements. We are focusing on these two elements here. So let's see. From the following data, you are required to calculate the cash generated from operations and operating profit before working capital changes for the year was 84,000. So he says the operating profit, okay, operating profit. So this is what the number he says, operating profit before working capital changes. Okay, that's what he's like meaning here. So he wants to find out this number. So this he has given. Okay, this he has given. It's not that you have to put it here only, you can even put it as here, profit before interest and tax, still it gives you the same meaning. Okay, it still gives you the same meaning only, that won't be a problem. So if you want, you can put it here, or you can also put it here, still you will get the same answer. But ideally what he says is operating profit is when you adjust all these things, it's operating profit. When you adjust the working capital changes, then it leads to cash generated from operations. Okay, thereafter you still deduct it, you will get the net cash flow from operations. See, this is something like GP, gross profit, operating profit, and net profit. Okay, so the first element that you will get from adjusting all this is for this number. Okay, operating profit before working capital changes. Adjust these two, you will get cash generated from operations. Adjust these two, you get the last number. Okay, so we'll start now. Okay, So I have already typed all these numbers and I've kept it. I've typed all the numbers and I've kept it. So what I will do is I'll put it as a working note. Okay, and I will take both these headings and I will show it here. I'll show it here. So first we have to see these are the items he has given. Okay, current asset and current liabilities, creditors, debtors, receivables, payables, inventories, investments, outstanding expense and prepaid expense. So it is like this is the opening number and this is the closing number. Okay, and we have to find out the difference between the both, the change in the year. Okay, so he says that if you are okay, if the current asset, okay, if it increases, it consumes your cash, cash is locked up, so you have to deduct it. If your current asset is reducing, it is a good thing for the company, the cash gets released. In current liability, when it is increasing, someone's cash you are using, so that is like adding cash to your business. If you are paying now your current liability, it means your money is being paid to reduce the current liability, so your cash is going out of your business. Okay, so this is what the two headings refers to. So rather putting like these two headings and showing like confusion, what I will do is I will directly show you, okay, how it works. So I will first see two headings. One is current asset. Okay, I think we'll have the headings. I think we could have, okay, we can have the headings better. Okay, first we'll assign it to current asset and current liability like that. So this is a current asset. We'll put it here. This is a current asset. We'll put it here. This is a current asset. This is a current liability. This is also current. So if you put it like this, it's quite easier to work out your problem. Okay, so what we'll get is we'll get the change here. Okay, the difference. So when compared to last year, our debtors have increased. Okay, so what does that mean? Okay, what does that mean? It means our money is stuck. Okay, our money is stuck for 40,000. Okay, so it is a cash is locked. Okay, so it is cash outflow. Okay, so we'll put it as out. Okay, the same way we have to get for all the numbers. Okay, for all the numbers we have to get. So let's get it. Okay, see here, when compared to the opening, okay, when compared to the opening, our assets get reduced. So it means that we are, okay, it means that last year it was 40,000 of current assets. Okay, our money was locked. Now it's only like 35, so 5,000 is released, so it is cash inflow. So like that you have to get for each and every item. Okay, so every minus means it is inflow and every plus refers to outflow. Okay, so we will total it so that we don't need to adjust each of it individually, we will just sum it. Okay, so we got 53,000. So 53,000 worth of money, okay, 53,000 worth of money is stuck. Okay, so you could actually get it, I think, like this itself. Okay, you could see here in the opening it had 5,45,000 of current assets. In the ending we have bought a little more of it, so it is cash outflow. Okay, so your money is like more stuck. So 53,000 So 53,000 of money is stuck. We'll do the same for current liabilities. I will explain each numbers here. Okay, see, you don't need to, you just need to show this alone. This alone you have to show. You don't need to show individually the changes. Individual changes like this you don't need to show. Consolidated is more than enough. Just for explaining, I'm showing it. If you see here, the company, okay, I think it is summing in the wrong way. Okay, so you could get an idea here. If you see here, last year creditors were 1,82,000. Okay, now it's increased. It means someone else money you are using, it is inflow. Again, the same thing happens in other items also. So the total is also in inflow. So last year it was 2,29,000 of others money you are using, but now you are using 2,50,000 of someone else money. So that is actually a good thing for you. So net it is a good thing for you. So it is a cash inflow. So we have started the sum with 84,000 of operating profit before working capital changes. Okay, so let's see the answer for this. So the answer comes to 52,000. So that's about the answer. He wanted us to find out the cash generated from operations. So if you want, you don't need to show this part of the element. Okay, it's unnecessary. You can just show like this. That's more than enough. Okay, or if you want, you can just show the this change alone. If you show, that's more than enough. Okay, so hope you got an idea. So in the previous sum we saw an adjustment till here. Okay, in this sum we saw the adjustments till here, and in next sum I think we'll see the adjustments for the entire stuff. So let's go to the next sum. Okay, so this next sum is a lengthier sum, and again they want an answer up to cash flow from operations alone. Okay, cash flow from operations. So they are referring to this number only. So in this sum also there is no interest paid or income tax paid. That's not both available. So we'll start. So if you see here, if you get a balance sheet like this and they want you to find out cash flow, how could you do it? Okay, and see, they're asking ascertain net cash flow from operations. Okay, so they are asking this number, ascertain net cash flows from operations, but of course you don't have both these numbers. You don't have both these numbers. You don't have. So predominantly you will get whatever the answer which is here, that is what you will get here also. So we'll start. See, share capital is stable. Okay, debentures is stable. Retained earnings is increasing. Okay, so what is the meaning of retained earning increasing? See, retained earnings at the opening, we'll put it like this. Opening retained earnings were 1,50,000. Okay, and the closing retained earnings has been 2,60,000. It means the inter between number is what the company has earned as profit before interest and tax. Okay, so we can't say that as profit before interest and tax. We could actually tell it as profit after interest and tax. Okay, that's what we could tell. But as we don't have the tax elements, okay, we have to less interest, okay, and we have to add back, okay, we have to add interest and we have to add the tax back, but both these numbers are 0. So naturally what happens is our profit before interest and tax, that naturally comes to same 1,10,000. Okay, so we can show this number here. So we have got 1,10,000. Let's move. So we have other elements. So we have the current asset, current liability items. So we have to tackle them in the same manner how we did last sum. We have buildings, we have depreciation. So depreciation on building has increased. Okay. See, any depreciation we have to add it back, right? We have to add back. There are two depreciations here. So depreciation on building, okay, the difference between the two numbers seems to be 50,000 minus 20,000. So that comes to 30,000 that we have to add back. And depreciation on machinery, see, there's also machinery depreciation is there, so that also you add back. If you add back, that comes to 55,000 is the closing. Last year we had 30,000 of depreciation, so the difference between the two is the current year depreciation. Okay, interest expense we don't have. Okay, we don't have those numbers and all. We don't have profit on sale and all. We have these numbers. Okay, we have to adjust for the reduction or addition in current asset and current liability. So we have that. So to do that, we will take the format we did in last sum. And we'll do it. Okay, let's fit. So we have two items from as current liabilities. So first I think we'll put them. Okay, so when compared to last year, it has increased or decreased this year. So when compared to last year, the current liability has increased. Okay, but we can take the total because total gives us a quick answer. We don't need to adjust all. Okay, the difference alone we'll see. So this year it is 1,02,000. Last year it was 80,000. The difference is 22,000. What has happened? So 2008x. Okay, so what has happened? So last year it was 80,000. Now it is 1,02,000. Okay, so we are using other people's money to run our business. So it has become a cash inflow. So it is a positive thing for the business. You can add that to the liability here. Okay, so it's 22,000. Now we'll do the same for the current asset side. So current asset side, we have three items. Again, we'll add them. We'll get the difference. So difference is 1,47,000. So last year we had 4,80,000. This year we have 6,27,000. So we are like buying more current assets. Okay, so our money is stuck in current assets. So it is a cash outflow. It's a cash outflow. Okay, so 1,47,000 is a cash outflow. Okay, so answer comes to 40,000. So is there any change or anything? We'll just check. Okay, so let's check whether the numbers are pulling properly. Okay, the numbers are not pulling properly. See, we should not take the cash at bank as a item. Okay, we should not take that as an item because that is our adjustment item. So that we should not take. So the total cash outflow is 2,20,000. So we'll try to adjust that. So we got the answer. So the answer comes to 33,000. So why we are not taking cash at bank? See, cash at bank is the opening and closing number of the entire cash flow statement. Okay, so be very careful with that alone. Okay, if you want, I will put it like this: cash at bank, okay, should be ignored as it is used as the opening and closing value of the statement of cash flow. Okay, so be very careful with that. You should not take that number. Okay, so that alone we marked it. So that's about this sum. We'll move on to the next sum.